Hello everyone, my name is Lexi. I am the new accounting TA for Accounting 112. In this video, we are going to go over two practice exams for the exam one. We're going to go over one from 2018 and one from 2019, just to give you guys a little bit of an idea what the exam might look like. And like I said in the email, I'll also be available on Friday for questions, as well as my regular scheduled office hours, or you can email me at any time for any question or help with anything. So I'm going to start with the 2018 exam, and I'm also going to start with the short answer. The short answer is the biggest bulk of the test, so it's better to start with that, just so then you can make sure you have it all done. So 18 is going to be the first one we're starting off. Basically, the only thing you have to do is label product or period costs. So for property taxes, that's going to be a product cost. For administrative travel, it's going to be a period cost. For indirect labor costs, it's going to be a product cost. For the cost of heating is going to be period cost. And depreciation is going to be product cost. And just so you guys have a little bit of background, so product costs are going to be directly related to a certain product, and like direct materials, direct labor, manufacturing overhead, as well as like the costs incurred by the business. So like for property taxes, indirect labor costs, and depreciation, those can all be traced and something that could be directly followed, whereas administrative travel and the cost of the heating cannot. And also with period costs, it deals more with time. So that's like why the travel is going to be a period cost. So that's basically it. And then for 19, it says Hacking Company has a job order costing system. The company applies manufacturing overhead to jobs using a predetermined overhead rate based on direct labor. The information below has been taken from cost records of Hacking Company for the past year. So then it gives you all these numbers. So you're going to, first we have to compute the cost of direct materials purchased during the year. So to start this, the cost of material purchase, the formula is going to be raw materials that are used plus ending raw materials minus the beginning. Sorry, I'm really bad at spelling. So if you look up at this chart, the direct materials used is going to be $12.50. And then you're going to add in the raw materials ending inventory, which is going to be, just highlight that, from December 31st, because that's year end, so that's going to be 80. And then you're going to subtract out the beginning inventory, which is right above that, which is 130. That is shown right here. So that answer, the cost of materials purchased, is going to be $1,200. Also, a good way to look at it would be from a T account. So that would look like this. Well, that's raw materials. So you'd start with the beginning, which would be 130. And then on this side, the direct materials used would go on the right side because it's saying that they are used, so they're going to be taken out. Sorry, this handwriting is going to be a little bad. And then for the ending, it's going to be 80. So you're looking for this middle number right here, which is the purchases, which is going to end up being that 1,200 right there. But that's just another way to look at it, if that helps with the T account. All right, so then that's all for A. And then for B, we're going to calculate the predetermined overhead rate during the past year. So first, we are going to calculate direct labor, because we're going to need that for the formula. That's going to be the total manufacturing costs minus direct materials minus the overhead applied. So the total manufacturing cost is going to be up here. That's 650, or sorry, 6,050. And then you're going to subtract out the direct materials, which is going to be $12.50, which is that first one up there. And also you're going to subtract out the overhead applied, which is right under that, the 2,800. So your total direct labor is going to be 2,000. And then your formula for predetermined overhead rate is going to be the overhead applied divided by the total direct labor found. So that's going to be the 2,800 divided by the 2,000 found in part B. So that gets you 1.4. So your predetermined overhead rate is going to be 1.4. If it asks for a percentage, it'd be 140%, but for now you could just put in as the rate for that's 1.4. Now to find the cost of goods manufactured, the formula for that is going to be beginning WIP, which is work in process, plus the cost of production, minus the ending WIP. So those are all given. Beginning WIP is right here, January 1st, so that's 250. And then you're going to add in the cost of production, which is going to be that 650 that we used earlier. That's going to be right here with the total manufacturing costs. And then you're going to subtract out the ending WIP, which is going to be right under that December 31st, which is 400. So that is going to give you 5,900. Now the cost of goods sold, that's unadjusted. The formula for that is beginning WIP, beginning finished goods plus cost of goods manufactured, which is what we found from C, minus the ending finished goods. So beginning finished goods is also given, that's going to be 300. Cost of good manufactured is what you just found, the 5,900. Ending finished goods is going to be up here, right? That's right here. That's going to be 200. So the cost of goods sold for the year is going to end up being 6,000. So that is all for 19. Now we're going to go to 20, which is activity-based costing. And these are going to be all given. So our four friends uses activity-based costing in their manufacturing process. The company purchases two products, ABC and XYZ. They have provided their costing department the following information from this year's budget. So all of these are going to be given. The following costs are expected to be incurred throughout the year and are related to the cost drivers being measured. So for A, we're looking for the overhead allocation rate for each of the overhead pools. So these pools right here, the labor overhead, the material handling, and the machine setup. So we're going to do those for all of them. So to find the overhead allocation rate, we are going to use the cost drivers, and we are also going to use the direct labor. So that's for labor related. So we're going to start with labor related. And we're going to take the 420,000. Let me just unbold and underline this. Okay, perfect. So the 420,000 comes from your right here, the 420. And then you're going to divide that by the direct labor hours, which for the total is going to be right here. Since you're finding it for the total of them. So that is going to be, you're not splitting it up between ABC and XYZ yet, so that's why you're using the 5,000 and not these. So you're going to be 420 divided by 5,000. that gives you 84. Then you're going to go with materials handling, which that's going to be this 40,000. And then you are going to divide that by the material handling up here, which is that 1,300. And that's going to give you 30.77. And then machine setup, that's right here, the 70,000. Divided by the 350, which is the machine setup right here, the total. And that's going to give you 200. So those are each individual rates for the different pools. That's all for A. Then for B, we are looking at just ABC. So we're just looking at this company first. We're not looking at XYZ yet. So to go back down, the total expected overhead allocated. So we're going to still split them up between the three pools. So we're going to start with labor related. So you're going to take the 84, what you found from A, and multiply it by 2,000. And that 2,000 comes from right here. So like I said, we're looking at ABC and we're looking at labor. So we're taking this labor and we're taking this 2,000 right here. So 84 times 2,000 gives you 168,000. And then we're going to take material handling. And we're going to take the 30.77 from above. And then we're going to multiply that by 600. And that 600 comes from right here. It's material handling for ABC. And that will give you 18,462. And machine setup, you're going to take the 200 from above and multiply that by 200. And that 200 comes from right here. Like I said, ABC, machine setup, so that 200. And that is going to give you 40,000. And then you are going to add these three up to get a total of 226,462. That's going to be your total expected overhead allocated to this ABC. And then for the second part of this question, the cost per unit. This cost per unit. To find that, you're going to take what you just found, the total cost per unit equals total expected overhead divided by the total amount of units. So that's going to be the 226,462 divided by 40,000. And that 40,000 comes from right here for ABC, since we're just looking at ABC. So you're just going to take that 40,000 units. And that will give you the 226,462 divided by the 40,000 gives you 5.66. That's going to be your cost per unit. So now ABC is done. And then for C, we're going to look at XYZ now. So we're going to look at all of the numbers on this one. So for XYZ, we're going to do the same thing that we did above. So labor related, we're still using the amounts from A. So 84, we're multiplying that by 3,000. That 3,000 is going to come from right here, the direct labor hours expected. And that will give you 252,000. For material handling, you're going to take the 30.77 times 700. And that 700 is going to come up here. That's material handling. That gives you 21,539. And then machine setup equals 200 times 150. And the 150 comes from right up here. And that is going to give you 30,000. Add those up. The total is going to be 303,539. That's going to be your total expected for XYZ. Now to find your cost per unit for overhead, you're going to do the same thing. That number from above, 539, divided by the units, which our units are going to be 60,000. Or 60,000. And then that cost per unit total is going to be 5.06. And that's the overhead cost per unit. And just something to note, so this says overhead cost per unit, that's why you just use the total overhead. But if it was looking for total cost per unit, so it didn't have this overhead here, that would be, you would need to find the direct materials, direct labor, and then the overhead, which would be found from here. Then you would find the total of these three and then divide it by the units. So that would be like 60,000 to get your cost per unit. That's just something to note. So, but since it said overhead cost, that's why you just took the overhead cost divided by the units. But if it asked you for total cost per unit, you would have to add the direct materials, direct labor, and then the manufacturing overhead that we just found. But since it doesn't give us direct materials and direct labor anywhere in this question, that will always be given to you. It'll say like direct materials, direct labor will give you these numbers. Then you don't have to worry about it because it just asked for the overhead, but that's just something to keep in mind. So that is all for the short answer for 2018. Now we'll go back up to the multiple choice. So Country Charm Restaurant is open 24 hours a day, and it is always has a fire going in the fireplace in the middle of the dining area. The cost of the fire is fixed with respect to the number of meals. Is that true or false? This answer is going to be true. And so it's fixed because it is always, if there's always a fireplace going on, that means it's always going to be fixed with the cost and the number of meals. All right, so that's going to be true. And then for 2, the blank is the amount remaining from sales revenue after all variable expenses have been deducted. That is contribution margin. That's just the formula. So that's going to be left after sales revenue minus variable expenses gives you the contribution margin. 3, on the schedule of cost of good manufacturing, the final figure represents, that's going to be D, the amount of goods completed during the year, whether they were started before or during. So that's going to be the final cost of good manufacturing is the cost of goods that are completed, no matter if they were started or before or during. Now for Bob's Burgers, they currently produce and sell 4,000 burgers per month. The following costs are 0.5 per unit for variable, 2,000 for fixed. They recently switched and it decreased by 0.05. In addition, they negotiated the store lease will be dropping by 40 per month. So we're asking what's going to be the new equation. So to find this equation, you're going to take the fixed costs of 2,000, and then you have to subtract the fixed costs that are dropped. So that's going to give you 1960. Sorry. And then you also have to take the variable costs, which is originally 0.5, but then it decreased by 0.05. So that gives you 0.45. So the cost is going to end up being D, 1960 plus 0.5x. And for 5, when making a decision, what of the following should not be considered? The answer is going to be sunk costs. Sunk costs are just kind of there. They're never going to be used. So when you make, it's not required to, when you make a decision. We don't really care about sunk costs. Which of the following types of companies would probably not use job order costing? And that's going to be C, a soft drink manufacturer. So job order costing is something that is smaller. It has small production versus process costing is very large orders. So a soft drink manufacturer, they're going to be making a bunch of soft drinks at once, a bunch of different flavors. So it's going to be a big manufacturing company versus some other small, like a car repair shop. It's not going to, they usually aren't too big. There's going to be like a small order. You're going to have to order small parts. Same with the doctor's office and a custom cabinet maker, where a soft drink manufacturer is going to be a little bit bigger. So Corsetti Company manufactures and sells pre-washed denim jeans. Large rolls of denim cloth are purchased and are first washed in a giant washing machine. After the cloth is dried, it is cut up into jean pattern shapes and sewn together. The completed jeans are sold to various retail chains. So what describes the cost used to sew these jeans together? The correct answer is going to be option B. So it's going to be a manufacturing overhead cost, but not a fixed cost. So it's not going to be a fixed cost because since it's sold to various retail chains and since it's a little bit different, it's going to be a little bit different every time. It's not going to be fixed. Clip Corporation, a merchandising company, reports the following results for October. What is the gross margin? So to find gross margin, the formula is sales minus cost of goods sold, and that equals your gross margin. So your sales are 433,000, and your cost of goods sold is 173,000, and those are both given right here. So that leaves your gross margin to be 260,000. So that is choice B. 9, proper journal entry to record issuing raw materials to be used on a job and to be used. So that is, we're looking for the journal entry. The correct journal entry is going to be C, work in process for a debit, raw materials for a credit. You're crediting the raw materials because you're to be used. If it was saying purchased, that would be debit raw materials, but since it's saying they're issuing them to be used, that's why you would credit the raw materials and debit work in process. All right. So for 10, the following data has been recorded for a recently completed job 323 on its job cost sheet. Direct materials cost was $22.60. A total of 37 direct labor hours and 141 machine hours were worked on the job. The direct labor wage rate is 13 per labor hour. They apply manufacturing overhead on the basis of machine hours. The predetermined overhead rate is 14 per hour. So for this, we're looking for the total cost based on the job sheet. So we're going to start with first finding your direct labor costs. This is kind of like what I was talking about. See how it says total cost, like what I was talking about in the short answer. So you're going to do the direct labor hours. Formula is going to be direct labor hours times your wage rate. Sorry, that's supposed to say rate there. Got cut off. So that's going to be 37 direct labor hours. And that's multiplied by 13, which is the per hour, per labor hour. So the total direct labor cost is going to be 481. And then we're going to have to find the manufacturing overhead cost, which is machine hours times the predetermined overhead rate. So that is going to give you, your machine hours is 141. Your predetermined overhead rate is also given a 14. So that gives you a total of 974. So now you're going to find the total cost. So the direct materials, so the total cost formula, that's what I was saying, the total cost is direct materials, direct labor, manufacturing overhead. That's going to be your total cost formula. So the direct materials was given for 2260. Direct labor was what we just found of 481. Manufacturing overhead we just found of 1974. That total is 4715. So, and then if you were finding, this just asks for total cost, but if you were finding cost per unit, you would divide it by the number of units. But this one just asks for cost, you can just leave it at that. And then for 11, during February, at this corporation, 79,000 of raw materials were from the store for use in production. These raw materials included both direct and indirect materials. The indirect totaled 4,000. What is the journal entry? So since this one is pretty similar, since it says for use in production, it's pretty similar to the other question. The answer is going to be B, debit work in process. So it's just like, and then if it asked for a credit, it would be credit raw materials of that same amount of 75. So since it is saying that you'd have to take the 79 minus the 4, and that's what gives you the 75. Since it's asking for both the direct and indirect, since you're redoing it, basically that's why you have to take them out, and that's why it'd be the 75, the debit to work in process. For 12, this corporation applies manufacturing overhead on the basis of direct labor hours. What is underapplied or overapplied? So for this question, I'm going to type it over here so it's a little bit easier to see since it's a little bit longer. You're going to first find the estimated overhead. And that is going to be, first, you're going to start with the 300,000. And you're going to divide that by the direct labor hours, which is 15,000. That number is 20. Sorry. Okay. That's going to be your estimated overhead. And then you're going to find the overhead for the actual. Which is, you're going to take the 1480, the direct labor hours, and then you're gonna multiply it by the estimated overhead, which gives you 296,000. That's gonna be what you calculated for actual overhead. And then to find out what was the overhead that was applied is given. This is going to be the overhead applied because it says what is applied. That's going to be the amount. So we're going to need that, which is 287, 120. And then to find if it was under applied or over applied for the actual, you're going to take the 296 and you're going to subtract it. Do that. Okay, that wasn't much better. So basically, you're going to subtract 296 from the 287, and that amount is going to give you 8,880. And then it's just asking if it was over applied or under applied. So since the actual of 296, what we calculated, was over what was applied, it's going to be over applied. So the answer is going to be C. So 13, indirect materials are charged to specific jobs. True or false? That's going to be false. That's actually the definition of direct materials, not indirect. Direct labor is part of prime cost, but not conversion cost. That is also false. So the direct labor applies to both. So I'll just give you the formulas for these real quick. Prime equals direct materials plus direct labor, and conversion is direct labor plus manufacturing overhead. Just so you have those. And then for 15, which of the following statements regarding activity-based costing is correct? So activity-based costing always deals with cost drivers and cost objects. So that's going to be D. It has to do with like purchase orders and machine setups. So that's always going to be cost drivers and cost objects if it has to do with activity-based. And then for 16, ABC is activity-based from traditional product costing. In which of the following ways does it differ? So from traditional product costing, it differs in the way that the cost drivers are used, because cost drivers are going to be what are used a little bit differently in activity-based costing. They're not really used in product costing. And then 17, activity-based management seeks to maximize blank while minimizing blank. So it's going to try to maximize the value and then while minimizing the cost. So you want low cost, and that's what the management is going to try to achieve. So then we already did these. So that's going to be all for 2018. If you have any questions, you can send me an email, or you can also come on Friday, or we can Zoom, doesn't matter to me. And now I'm going to go over 2019. So this is 2019's exam. Or sorry, 2020 actually, from last year. And I'm going to start with the short answer again, because that is good to start with. So Harris Manufacturing makes refrigerator replacement parts. In May, Harris produced 2,000 costs. The costs were incurred as follows. Given this data, calculate the total prime costs for the produced in May. So this is just like what we did. Sorry, let me just scroll back down. Just like what we did before, like I just showed you, for prime cost is direct materials plus direct labor. So the direct materials, since it gives you the per unit, so for this, it's giving you per unit in per unit, you're going to have to calculate the total, but we'll first do the per unit. So the direct materials per unit is 60, which is given. And then direct labor is going to be the 60. Let me just do that real quick. So direct materials is 150, sorry about that. And direct labor is 60, both given, both per unit. That gives you 210. That's going to be per unit. Since it's asking for the total prime costs for the units produced, you also have to multiply it by the number of units, which is 2,000, which is right here. Because it didn't ask for just the units, not for the total. You're going to multiply that by the 2,000, which is going to give you 420,000. And now for conversion cost, this is just asking per unit. So you're not going to need to multiply it by the 2,000 like we did up here, since it's just asking per unit. And the conversion formula is direct labor plus manufacturing overhead. Your direct labor is shown above the 60. And then your manufacturing overhead is also above, which is going to be this 50 right here. So you're going to add 60 plus the 50 is the 110. And that's going to be your conversion cost per unit. If it didn't say per unit, if it said total conversion cost, just like an A, you would just multiply that by the 2,000. So that's going to be your all for number 1. For number 2, it's asking for the total manufacturing costs. So the total manufacturing costs are going to be direct labor plus direct materials plus manufacturing overhead. That's the formula for them. These are all given. Direct labor is going to be this 90,000 right here. Direct materials is this 50,000, and then manufacturing overhead is 60,000. So those 90 plus 50 plus 60, and that's going to give you 200,000 is going to be your total manufacturing costs. And then cost of goods manufactured, the formula, I'm just going to write this out like this, is beginning WIP, which we did this in the other practice exam, plus the total manufacturing costs minus the ending WIP. And so the beginning WIP is up here. It's going to be that 10,000. The total manufacturing cost is what we found above, the 200,000. And then the ending WIP, also from above, is 25,000. So that total is going to be 185,000. If you want to see it in a T account, if that will help, for your T account, cost of goods manufactured is 10,000 at the beginning. Your manufacturing costs are going to be right here. Your cost of goods manufactured is what you're looking for. Then your ending would be right here. Just if you want to see it, you can do it either way. And then for number 3. So for number 3 and 4, actually, we're not going to do these just because they're not going to be on the exam. You guys didn't learn these yet. So we are just going to go back up to the multiple choice. So managerial accounting is primarily concerned with providing information to external users, where financial accounting is decision-making. True or false? That is going to be false. It's actually the other way around. Managerial accounting is the one that deals with decision-making. Which of the following is not a source of information used by management accountants? That answer is going to be D. They are actually all sources of information that are used. All of the following are examples of a service form, except online retailers. That's A. So for B, it's performing taxi services. So that's going to be someone that is actually going to be in the taxi driving you places. Public accounting firms, they're also a service because if they're taxed, they do their taxes. Audit, they're going to audit your business. Lawn care companies are going to be the ones cutting your lawn. Those are all services versus online retailers. You're just shopping, so it's not a service. Lean manufacturing is designed to minimize the amount of time it takes for a product to flow through the production process. That is going to be true. So you're trying to reduce the waste and minimize time. 5, which of the following types of firms normally carry inventory? That's going to be B and C only. So that's only manufacturing and merchandising. So you're not, if you're a service firm, you're not going to have inventory. You're just performing the service yourself, or the company is, where manufacturing firm and merchandising firms are both going to have inventory on hand. So for 6, which of the following is considered a direct cost for a unit of production? That is going to be C. Your direct cost is going to be the wages paid to assembly line workers. The rest are indirect, like for B. The reason why it's C and not B is because it's a supervisor is going to be an indirect, versus these are just assembly line workers. So since they're actually the workers, they're going to be the direct cost. For 7, service firms generally include which of the following as product or job costs? That's going to be direct labor wages. So since it's a service firm, for a product cost, that's direct labor. And that's going to be their actual wages because they're performing the service. Which of the following is not an example of manufacturing overhead? That's going to be D. So since it's a supervisor's salary for A, that's going to be manufacturing overhead. Since it's rent expense for the full facility, that's also manufacturing overhead. And cleaning supplies for the whole floor, the indirect, so it's manufacturing overhead. That's why it is D. And then for 9, cost of goods sold can be calculated in the following manner. That's B. This is the formula that we did in the other exam: beginning finished goods plus cost of good manufacturing minus ending finished goods. 10, which of the following costs can be considered variable? That's going to be A, heating bill. So it's variable because it can change from time to time, where employee salaries, they're always going to mostly stay the same for the most part. Same with rent expense and material purchases. Which of the following statements best explains the concept of relevant range? The answer is going to be C. Costs behave consistently within the levels that are reasonably likely to occur. So since they're going to be consistent, that's why it's going to be within that range within the levels. Which of the following best explains step costs? These are costs that are fixed within a relevant range but change at certain thresholds. So since it's almost like it's called steps cost, because it's like you're going upstairs, where like they can change, it's going to change your height, it's going to change at certain thresholds. For 13, which method of cost data analysis involves approximating a linear cost relationship based on extremes of production volume? This one is not going to be on the exam because you didn't learn this yet, but it's a high-low method. But don't worry about that. It's not going to be tested. This one also won't be tested because you didn't learn break-even as well, but the answer is A. Which of the following will not affect net income under variable costing? Variable costing is in cost of goods sold, and it excludes the direct fixed overhead. So the answer is going to be a change in fixed overhead application rate. That is not going to affect your net income at all. The equation to find the contribution margin under absorption costing, that's going to be D. So absorption costing does not calculate contribution margin. Contribution margin is sales minus variable costs, but with absorption costing, you are not doing that. 17, which of the following is a disadvantage of using variable costing? That's going to be A. You have to have 2 sets of accounting records maintained. So that's going to be disadvantage because you have to keep 2 separate ones instead of just having one. It's a little bit more difficult, a little bit harder to keep track of. And then 18, absorption costing is required for reporting to which of the following groups? It's going to be A and B only. So you're going to have to report it to the SAC and the IRS, but you don't have to report it for the senior management. And then 19, because customers can so quickly compare prices, a business cannot simply raise their prices, but must be able to control costs in order to realize a reasonable profit. That's true. They can't just raise their prices out of the blue, or else they won't make any money because nobody will buy it from them. They'll buy from another company because there's so many other companies out there. Which of the following equations describes the contribution margin ratio? That's just a formula. That ratio is sales minus variable costs divided by sales. So it's going to be B. All right. And then we're back to the short answer. So that is it for those. Basically, these will, if you guys want these, I will save both of them as well. So I can send them to you guys if you want them, or we went over them. You can watch this a million times, pause it, do whatever you want to do. And then you'll be all set. If you have any other questions, like I said, again, please just don't hesitate to email me, or if you want to set up, I can meet with you in person. I can meet with you virtually. And on Friday, I'll be in person in Biz Grove 128 from 3 to 4. If you have any questions, or you can always, if you don't want to come, you can always just send me an email. All right. I hope you all have a great rest of your night.